Hi, everyone, and welcome to our first time homebuyer webinar. Um, we are from Advantage One Credit Union, and my name is Becky McNally. I am a loan officer here. I actually started up the mortgage program here about 5 years ago. I've been with the credit union 12 years and going, and we're excited to present this to you.
And hello, everybody. I'm Ken Segler, and I hired in with the credit union in December 2019 as a mortgage loan officer to join Becky. And we've expanded since then, have a processor with us as well that's on staff named Kelsey Ola. I've been in the mortgage industry and there's some white hair, about 23 years now. Been in lending about 35. I've worked with credit union mortgage lending for about 15 years now, and I like working with Advantage One. They're interested in getting you the best program and lowest cost and rates possible. So it's a good place for me to be.
So I'm going to go over the mortgage process. We're going to be talking about this throughout the entire webinar here. So some of the key points we're going to touch on here: pre-approval, showing how much you can actually get approved for, your search for the home. Once you make that offer and get a purchase agreement signed, once that offer is accepted, the loan application portion of everything. And then once we get back all of the documents and it goes into what's called processing, where things are ordered, like such as appraisal and things of that nature. After we get everything back, like the appraisal, title work, we will put it through to underwriting, where they're going to comb through it with a fine-tooth comb. And then once you have a clear to close, and you actually get to closing. So how do you get a pre-approved? So we're going to go through everything with you, such as your credit, what your credit score is, and the history. We're going to talk about how much income you have, so we can see what you can afford. We'll also talk about assets that you have, because we need to see what kind of money you're bringing to the table as far as a down payment, closing costs, things like that. All of this is going to help us figure out how much you can actually afford. And if you're not satisfied with that answer, we can talk about steps as moving forward. Maybe you need to fix some things on your credit, or maybe you want to save up a bit more because you want your lower interest rate or things like that. So we'll be able to talk about all of that with you.
In the credit qualifications, as Becky touched on, we are going to look at your credit score and your credit history. Credit score is only one part of the different pieces that are going to go into your pre-approval. Okay. It can be a very important piece. There's minimum credit scores, and there's certain lines of having your credit above a certain line from a credit score standpoint that's going to help you. And we'll look at that and identify those things and attempt to help you target those things so that we can improve your credit score. As we go through the pre-approval process and the application process and then underwriting, we do follow the guidelines as written by Fannie Mae, the conforming loan guidelines, FHA, which is the Federal Housing Administration, and VA, the Veterans Administration. They all have different guidelines. So we're going to structure your loan and collect the proper documents and advise you as to what's going to be best for the particular loan program in getting a quick approval. Okay. If there has been bankruptcy, foreclosure, judgments, what have you in the past, there is a time frame that where you remain ineligible for home financing, and it's a different length of time depending on the loan program that we're able to match you with. So don't hide those things. Feel free to bring them out. We can talk about it, and it'll help us structure the best loan for you. Collections and charge-off accounts may or may not impact your ability to purchase. it'll show up on the credit report. It's worth talking about. It may improve your credit score to pay it off. It may not be worthwhile to pay it off if the underwriting report that comes back in the pre-approval process says it does not have to be paid off. So we're going to work with you on that. Student loans, there's multiple different ways to attempt to lower the amount that impact has on your debt to income ratio so that you can potentially afford more home if that's what you want or need. And we've got some different workouts there too, okay? So we can use a minimum that's allowed for the particular program. As an example, the conforming loan says 1% of the outstanding balance for the minimum payment. You may have worked out a payment arrangement that's based on an income. It's an income-based arrangement as to how your payment would be. We can go back to the original notes that you signed. If those payments identify as being lower. So we'll work with you if the student loans are an issue to try to have those have the minimal impact on your overall pre-approval, okay? It's especially important when all of these student loans, or many of these student loans, excuse me, are in a deferred status right now. We still have to show some type of payment amount there, and we're going to try to limit its impact on our ability to get you approved, okay? On the next slide, that kind of works with, there's something that's called debt to income ratio. The amount of debts such as student loans, car payments, credit cards that are going to be counted as your existing debt plus your new house payment. And that's going to be the top number of a fraction, and the bottom number is your income. It's interesting because some people will, it's fun because in March or February, everybody knows what their W-2 said from last year, but yet even the W-2 taxable amount can be much lower than what you actually earned. That's a usable wage, okay? So we're going to work with you to try to maximize your income and have you qualify for the best loan possible. We are not the IRS police, so if you have some type of side job under the table, what have you, you can talk about that with us. If it's not claimed on a tax return, it doesn't mean we're going to be able to use that income, but we'll at least be able to identify if you're getting deposits from this income into your account to whether or not that's usable for assets, okay? So be open with us. We're here to collect this information and sort through it and help use that information to pick the best loan program for you. If stuff's left out, we may miss an opportunity to help you. Go ahead.
So assets are also a big part of getting pre-approved and getting a mortgage, because we need to show you have enough assets or enough money to buy the home, to put a down payment down, to have maybe reserves. That's what it's called when you have money in a savings account or retirement account, maybe some sort of an account to show us you have money there in case something were to happen and you need to be able to make those payments on your mortgage. So we need assets in order to show many things. Now, the amount of assets, it differs for every person in every situation. So your particular situation will, have a different answer than someone else's. But it's important to understand what assets are and what you can use towards a mortgage. So you cannot use your money under a mattress. It has to be what's called sourced and verified, meaning we have to show where it came from. So an account somewhere, and to verify that, we have to have bank statements, usually at least 60 days, just to show he's had these in this account and here's proof of that. So it's just a way to show it's traceable and that it's available to be able to be used towards that mortgage. Now, the next part that is also important is once you find the property, we need to know what type of property it is. Is it a single family home? Is it a condo? Is it a manufactured home? These are all really important to us to figure out if the house itself can even be, if we can even lend on that home. If there's any extra things we need to do in order to make sure that that loan goes through when we send it to underwriting, such as a condo questionnaire. So there's different things that we need to figure out from that. Knowing if it's in a flood zone, you may have to carry what's called flood insurance because you're in a flood zone. So that's also important. And if you own any other properties out there, we need to know about those as well because we need to take it into account. Even if there's not a mortgage on those properties, we need to know what your taxes, your property taxes, and your homeowner's insurance are on those properties. So maybe you're a first time home buyer, but your name is on a lien, or I'm sorry, on a title for another home because your parents wanted to make sure, hey, you get this family home when we are unfortunately pass away. So you're going to be on this title. Well, you're still an owner of that home. So we need to know that. So there's just certain things that we need to know as far as property goes.
The payment breakdown on your home, Becky mentioned that a possibility of there having flood insurance, okay? Um, on a lot of first-time buyer programs, people want to put less than 20% down, okay? And it's a federal law that if you're not putting 20% or more down, that in addition to the principal and interest, and that's just the math based on your home purchase price, less your down payment, the amount that you're financing at a particular interest rate for the number of years, that's your principal and interest, okay? I'm going to skip over the PMI for just a second, and then your escrow account. There's some confusion with that, but an escrow account will typically account for your taxes, your property taxes on the new home, and the home insurance that you choose to carry on it. Okay, you can shop for the home insurance. We'll work with whomever you want to. State Farm, Farm Bureau, AAA, Allstate, on and on they go, right? Lots of fun commercials there, but we're going to take the amount of the yearly premium that you choose. We're going to divide by 12. If it's $900 a year as an example, we divide by 12. That's $75 per month. That's going to be part of your monthly payment. If the property taxes are $2,400 a year, adding together the summer and the winter taxes for the current owner, 2,400 divided by 12, 200 a month. So besides principal and interest in those examples, you'd be adding $275 a month as part of your house payment. And then in the future, your account with the lender, out of the payment that you've made, we're going to make the homeowner's insurance renewal payment from your monies that you've deposited with us. Same thing with property taxes. PMI is private mortgage insurance. That's what that stands for. How that's a benefit to you, it increases your monthly payment, right? So where's the benefit? The benefit is that you're able to qualify for a home mortgage loan at the same interest rates as somebody that's put down 20 or 30 or 40%. But there is this monthly insurance premium that's part of your house payment, and those dollars go into a pool. So for those that have only put 5% down or 3% down or 3.5% down, that encourages the lender to make this loan to you at the lower interest rate. If there is a default for some reason on the loan, we're able to dip into those funds out of that pool of money that your monthly payment is included, and we get reimbursed for the losses to a degree. Additional home expenses could include flood insurance. Yes, I can say that. Could include. So the flood insurance, depending on the type of flood zone that you're in, that can vary. Flood insurance doesn't have to be astronomically expensive. Okay. It could protect you against a serious loss. Homeowners Association, if you're going to buy in a neighborhood that has they take care of certain things of the neighborhood. There's a park, they put flowers, maybe they're shoveling the walks, etc. there's going to be a fee for that, typically yearly, that you're paying, sometimes monthly. We do not include that in your payment that's made to the lender Advantage One Credit Union. The homeowners association is excluded, but we do have to include that as part of your housing expenses. Okay. So at worst, you have principal and interest, taxes and insurance, and PMI, if you have not put 20% down payment, and flood insurance if that's warranted by the location of the home. Okay. On to the next screen, the actual loan application itself. So we've done a pre-approval, but it hasn't included a specific property address. And there could be two homes right next door to each other that were built the exact same time, same, everything. But they're going to have different expenses from what their property taxes are based on the term of ownership. So we don't finalize your actual amounts that are going to be due at closing and computing your house payment until we have an address that's been provided through that accepted contract. Okay. And at that point, federal law says we have to have a completed application within 3 days. We certainly try to do it quicker than that. We can certainly try to get the same day or 24 hours, maximum of 3 days. And when we complete the application, we must submit to you in writing certain disclosures that include something called a loan estimate. And that's the best of our ability to project what your costs are going to be, both from an interest rate and amount financed, your closing costs, your total amount due at close. And it can be either signed in person, okay, or we can send them to you electronically. We discuss those items if you have questions about them. And if you decide that you want to proceed with us, let's hope so. We're also going to be asking for the specific documentation to verify what's in that application, your income, the assets, identifications, W-2, bank stubs, things of that nature. Okay. We are going to ask that, it's going to be a very busy time for you, but we are going to ask that once it settles down a little bit with property inspection and what have you, and submitting these documents, that you begin shopping for a homeowner's insurance policy so that you're able to understand what coverages you're getting, what your deductible is, and what your yearly expense will be, so we can finalize and update your application with that. Okay.
Okay, so after you send us all of that information that Ken had just talked about, your income, your assets, everything we need to verify, we will send the loan to processing. And as he discussed, we do have an in-house processor right now, Kelsey, and she will order the appraisal. She will order your title work. She'll do everything on the back end that needs to be done in order for the mortgage to go through. She'll also look through it before it even gets to underwriting, just to make sure we have all of the documents that we need. There may be a stray here or there, or hey, we actually need an updated pay stub because it's past the time that they allow. She'll look through it all, make sure everything looks good. Once we get back that appraisal, title work, you will be notified. We do let you know as you're going through all of these steps where you're at. Once we get that appraisal back, we actually will send you a copy. And you'll be able to look at it. You'll see the value. We'll tell you the value, because we need to make sure that the house values for what you're purchasing it for. And once everything clears on that is when we will actually send it through to the underwriters. They're the ones that will actually make sure that it follows all of those guidelines that Ken talked about at the beginning, for Fannie Mae, FHA, VA, any of those that we're going through. They need to make sure it's following all of those guidelines, that we've provided all of the documentation needed for all of those, and they will give their final stamp of approval. Now, they're going to look through it. They're going to make sure all the T's are crossed, I's are dotted, and then they will let us know if there's anything that we need to change, which, it does happen a lot. So if it happens on your loan, don't be shocked. We're always looking for a quick unicorn loan that goes right through and we're good to go. And it doesn't always happen, but no worries. We work on it as quickly as possible to get that closed because we know you want to get in your house and we want you in there as well. So we're going to work on that, make sure that we get all of those conditions are what they're called, and we're going to make sure that all of those are cleared. And what we're looking for from those underwriters, once we send all of that through and they're happy with it, is a clear to close. So will give that final approval and say you are clear to close. So as far as your cash to close and what's included in that would be, first of all, your down payment. So that's what you're funding. So how much you give is what we will talk about when we even first start the pre-approval, but also during it. You may want to change things up and we can talk about that. Now, all of that is kind of done prior to it even getting to underwriting, but that down payment is a big one. So we will discuss that. It must come from obviously an account or a gift. So you can receive a gift from a relative. And we would work all of that out and get a gift letter. If that's, maybe your parents or grandparents wanted to gift you some money, we can do that and use that towards your down payment. It can also be used towards those closing costs, which is what we're going to talk about next. Your closing costs or loan costs would be what the lenders or ourselves are charging for processing, underwriting, closing, all of those things. And we're going to include those. It includes how much the appraisal costs, the flood search, your credit report, title fees. So it includes anything that we needed to do in order to close on your loan and get your loan through everything. We're passing those fees along to you. So we get an invoice, we update it on your closing costs. Another thing that's included are your prepaids and escrows. So that is including what's called prorated taxes to the seller. So when you purchase a home or own a home in general, you are paying your property taxes. Well, those are usually paid twice a year. So it's normally in July for our summer ones, which is coming up here, and then December for the winter ones. And you're paying, and you're always in the middle of a tax season. So if you were to buy the house now in May, you would be paying that seller back because they've already paid from December of 2022 through to this year, December 2023. So you're paying them back from today, May 11th, 2023, all the way to December 1st, 2023, because they're not living in the house during that time. And then again, for anything left over for summer, from now until July 1st of 2023, you're paying them back. That's prorated taxes. You also have to pay for that prepaid insurance, for the year up front, like Ken had talked about. And then setting up your escrow, meaning because we're in the middle of the tax time, we need to collect money so that way when summer taxes are due in July, we have enough money to pay those. So all of that is included in that cash to close, and we'll go through all of that with you. Once we get there and we have those numbers, we will go through everything and make sure you understand where all of the money is coming from and what's needed.
Hey, so the actual closing itself, um, we get there hopefully as quickly as possible and you feel prepared, you know? So the amount that you are, have been advised that your total closing costs, that's the amount that you're going to bring, so to speak, to closing. Depending on the title company that's conducting the closing, they may want a cashier's check. They may want the funds wired there. Your realtor and ourselves can help you with determining what that is. So we always say cash to close, but no suitcases full of money allowed. Okay. Everything has to be through a paper trail. So you bring that payable to the title company. The paperwork is there waiting for you. There's any additional paperwork or finalizing the paperwork on the contract itself. The title company will have some privacy disclosures, things of that nature, and then there's your loan documents, okay? That's and you get to shake hands with all involved, and you get the keys to your new home. So successful closing. But we'd welcome any questions that you would have. We can be reached, and here's contact information for both Becky and myself. Okay. We're willing to receive text messages for this type of, especially an initial conversation. It's a little bit difficult to do through text, but we're willing to receive text messages and what have you. It could benefit you more to be able to put a period of time out there for a conversation. When it's 15 minutes, 30 minutes, an hour, we'll meet you at the branch. We can do a telephone call, that's arranged. Okay. Very often, if you just try to call us and say that you wanted to discuss one, if we're available at that moment, we're absolutely going to answer. Okay. We end up with we answer the phone even when it's a spam message, so we're willing to do that. We have our emails posted here as well. But there's no cost or fee of any kind to have a conversation about how we can help you and get the process started. Okay. Very good. Becky, back to you.
Well, we'd like to thank you so much for joining us for this webinar. Like he said, please contact us if you guys have any questions, or if you'd like to start an application. Thank you so much for joining.